The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut, man. How you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, come on here to the Diagnostic Trading Hour here on TFNN. I'm your host, Darrell Martin. And let's check out where the markets are at for your lunchtime market wrap. Right now, we got the S&P 500 E-mini futures right now sitting down about 6 and almost 7 points. We got the Russell down a little over 5 points on the day. We got the NASDAQ down 13 with the Dow down 68 points right now. We got copper looking over on the metal side. We got copper right now sitting pretty flat, about up a little over 0.25%. We got gold is down about 0.5%, down about $6. We got silver is pretty flat on the day, just a few ticks off. Right now, looking at our energies, we got natural gas is sitting down 3%. So, got to love natural gas, one of the most volatile instruments. Either you love it or you hate it. And you can trade it on Nadex. So, nice defined risk products made for those high volatility products that have to use stops, depending upon, which contract you choose. No matter what contract, every single contract has defined risk. We got oil is currently sitting down 91 cents on the day, almost 1%. So oil is moving for us. And we'll check out natural gas. We had a natural gas inventory. We had oil inventory yesterday. We didn't get a chance to look at those. We'll go back and look at those today and see a way you could have played the natural gas and oil inventory reports, because we can play them each and every week. So you're going to love that report right there. Checking out corn and soybeans over on the ag side of things. Corn is up $5, and we got soybeans up 14. So nice 1% move, 1% plus moves over in the ag markets. Some good trading opportunities right there. We got FX. Let's run down a series of FX pairs. We got euro dollar currently down 16 pips. Aussie dollar's down just 3 off settlement yesterday. We got pound dollar up 37. Dollar franc is up 6. Pretty quiet in the forex markets. Dollar CAD is down. Well, it's basically flat. 30 pips, I guess. Okay, so yeah, it's down a little bit right now. But looking on over at the U.S. yen, we got the U.S. yen is down 20 pips. We got the Aussie yen down 17. Again, pretty flat markets right there. We got the euro yen down 48 pips. Pound yen is down a mere 10 pips, but it says a positive percent. That's pretty weird. Euro pound, not quite sure how those two numbers come together. We got the euro pound is currently down 27 pips on the day. All right, well, that gets you your lunchtime market wrap. And let's see, what news did we just have that came out? We had the Bank of England, Governor Carney. He came out. He had a little speech last night, and or this morning, I guess, depending upon your time zone in the world. But he's the Bank of England, the governor of the Bank of England, and his speech was a press conference at the Financial Stability Report in London. And not really a tradable report, but one that is good to be aware of. And he basically said that they will raise the rates, but it'll be slow and gradual. So it'll be gradual and limited was basically what popped up out of that. So what's the net result on that? Raising rates. What does raising rates mean? It means higher value of currency. Pound dollar goes up. Let's check out a pound dollar chart real quick with all that in mind. And once I got that chart sharing over there for you, give me 1 second, and we'll have it up. Okay. So with the pound dollar and the movements right here, and we'll bring that up to date for you in just a second. But first thing I want to do is I want to go back and I want to look, okay, specifically at the report when it came out, not the report, but the press conference, and when it came out, and that press conference was released at 5:30 this morning. Lots of volume spike activity going on right there. There we go. So it's updating live for you. And one more second. There we go. Okay, so 5:30, right here, we can see this big volume spike. A lot of volume taking place where it turns on around. And even leading up to the report, a lot of volume activity happening, dies off while everybody's waiting for him to talk. He starts talking, and boom, it explodes. Then it flattens out, completely normal expectation after a volume spike. Usually expect the market to flat or reverse a little bit. And but we did get a definite, uptick on that. Obviously, somebody knew something was going to happen, and not abnormal. And so you see all this buying activity coming up. And so that happens. Boom, they take their profits, and the market comes on back down a little bit, waits for him to release the news that they're ready. So they take their profits, things back down there to buy a little bit cheaper, right? And put on a whole bunch more, and boom, another volume spike on back up. Again, when I use volume, I look at the futures volume on Forex. So I'm going to look at 6B when I'm trading pound dollar. I'm going to look at the 6B futures for the pound dollar spot FX. And many traders, especially in the FX market, have been known a time or two to not think about using futures volume. Or using volume period, or they mistakenly use spot volume, which is limited over the counter for specific brokers. You want to get actual exchange-based volume when you're trading Forex, and so you need the futures to do it. And not doing that is like leaving one of the three primary stools of trading, which is you're going to have price action, you're going to have expected movement, and you're going to have volume expectancy. And you need to have that volume, you need to have that expected movement, and you need to have that price action. If you leave one of those three out, then your stool's going to fall over, and you're not going to know why your trading did not work out. So, and you're going to try to keep trying to make that price action, those technical indicators, do all the work for you. But you still aren't bringing in that third leg of the stool to keep that thing up, which is volume. So you need to make sure you include it. Or maybe you have no expectancy on movement. You need to have expected movements. I plot out the expected movements on the hour. I got the deviation levels. We plot those inside the spread scanner over at TFNN. And, look at the move. I expected it to go this far this hour. What did it do? It went that far. Expected to go this far this hour. Knocking it out. Okay? So you want to know those expected moves, and you want to really know the expected move on a high to low for a day. And so, for example, just to make it easy, I'll plot this right here with the deviation. And it'll show us the high to low move on the day on the pound dollar. So what does a deviation mean? I don't mean a standard deviation on historical movement. I don't mean simply pivots or fibs, which, hey, there's value in all of them. You can line them all up. You get confluence. Then that's awesome. Okay? What I mean is based on the implied volatility of the underlying market's options. It's like the 6B options. Okay? Exchange-based options. What is the implied volatility of that market? And how far is the market telling me that the market is going to move today? Okay? Not how far did it move yesterday. Not what some pivot formula based on previous days. But how far, when people are saying how far is the market, what are you willing to pay in premium pricing on options? Then that's a vote for how far the market's going to move. And that's people putting their money where their mouth is. And so we pull that expected movement pricing out of the option, which is implied volatility. We tie that into a deviation model. And one deviation move basically is, roughly 70% of all expected movement that is going to occur on any given day. So 3 out of 10 days aren't really going to go further. Why is that important to know? Because that's when you should stop adding on to your positions. Unless there's just insane volume blowing things through the roof, that's where you stop. That's where you tighten your stops. That's where you stop adding on, and that's where you look for a reversal trade. Okay? And so, example, we got a deviation, high to low, right here. Okay, so basically how far did it retrace from the low? That's why it's red. And once it hits the one deviation marker here for the day, 100% of that, boom. Turns around, it goes right back down to the tick. Not just the one deviation from settlement, but more importantly, the one deviation from high to low. And just to show you where are those at, they're right here. If you go over to TFNN.com, they're located inside the spread scanner. You can get access to it. Check it out for free right there. And it comes with deviation levels, comes with the binary scanner, comes with the spread scanner, comes with training education. Try it out for free. Check it out. But right there, deviations. Click on it. We're listing these out. And so like pound dollar right there tells us, what is the settlement, what's the deviation, how much is a move expected. Move expectancy for the day was 71 pips, high to low. And we hit it to the tick. Okay? So we publish those every night at 8:15 Eastern Time, and we got them on a variety of markets for you. They will help you out tremendously on having proper expectations. And we got them on the S&P 500, the small cap. Basically, we have them on ES, to make it simple for you if you don't know Nadex. We got them on, here we go, ES, NQ, TF, YM, CL. Okay, NG, GC, HG, SI, ZC, ZS, 6A, B, C, E, J, S. Okay? But also we have them on a bunch of cross currencies as well for you. So any combination of the Aussie, the pound, the Canadian dollar, the euro, the yen, the Swissy, and we have even added, we're going to add in, we haven't published it on here right now, but added the New Zealand crosses as well. But you also got all your major, indices, your major energies, your major metals, and your major ags. So very, very helpful, and just gives you a real perspective on the market. You can plot these levels right on your chart, and for the day, it takes a couple minutes. And you can plot all of them, or you can just plot, most people just plot like settlement. They plot like the +1, -1. The big number to focus on right there is that one deviation high to low, that 14.7, or whatever it says the market's going to move. That's the big number that we really want to look at. Okay? And anyway, so that sort of catches you up there. If you're wondering what this Nadex thing is that I'm talking about, hop on over to TFNN's homepage. Right here, there's a Nadex banner on the right-hand side. Click on that banner. From there, you're going to be able to find out about the Nadex Exchange. It's the North American Derivative Exchange. It's located in Chicago, and it's regulated by the CFTC, Commodity Futures Trading Commission, same entity that regulates, regulates the CME. The Chicago Mercantile Exchange, for all the major futures like S&P and gold and all that fun stuff. CME Group owns all those different sub-exchanges. And so they regulate. They're in, like I said, they're in the U.S. So your money's in the U.S. Your money is deposited in segregated accounts that are not touchable by creditors and not tradable by the exchange. It's an exchange, so they're not trading against you. There are other traders and market makers trading against you. And you can see the liquidity of that second of the price, the best pricing. So you got transparency in pricing, but you have anonymity by trading through an exchange. And maybe you've heard of binaries before. Well, Nadex is a whole lot different. And they don't just have binaries, they have spreads, which are basically options for day traders. So I'm going to talk to you about both of those when we get back after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, welcome on back here to the Diagnostic Trading Hour. And so we're going to talk a little bit about what binaries and spreads are. A lot of people don't know. Want to make sure you are up to date on that. After I do a quick review for you by the end of the hour, I want to go through and do a nice review on oil. We had a pretty sweet move today. And again, a one deviation move. Perfect, sweet, nice downtrend before he flipped around and went on long right there. And to see it even cleaner, without any indicators on the chart besides the deviations there, you can see it move on down. Got that one deviation move, then boom, done. Time to stop adding to the shorts. So, would have told you that. Would have told you to tighten those stops on up, and gives you a perspective on what kind of move is a big move. And again, they're updated every day. So, a deviation one day may be, a buck, say $1.20. The next day, it could be 75 cents. So it's all based on the implied volatility of the options. We'll come on back to oil and natural gas. But first, let's make sure you know what these binaries and spreads are. Okay, one, it's not just binaries on Nadex, North American Derivative Exchange. They also have spreads, and spreads are a lot like a put or call, just vanilla put or call option. Okay? For you option traders out there, and by the way, you can use your charts on your existing platform. So whatever it is you like to use. You like to use eSignal. You like to use, Ninja. You like to, whatever platform you like to use. You can use anything you want. So just make sure it has what you need to be able to analyze the underlying market, because you're trading a derivative. And you want to make sure anytime you trade a derivative, an option, like you don't look at option charts on Apple to trade Apple. You're going to be looking at Apple. Okay, so pull up your normal charts and then use that to help you pick your direction or your strategy. Maybe you're going to trade neutral. Maybe you're going to trade premium cool action. Maybe you're going to trade breakout, random walk, trending, swing, whatever it is that you want to do. But just make sure you have the right chart. So what is it based on? They got binaries and spreads. You can trade them on a variety of markets. We actually have listed all within the scanner to make it really, really easy. And they have a platform, honestly, not my favorite. So I made my own for my own trading and share with you. I trade just like you. I'm just a trader just like you are. And we go down here, and that's to show you what markets are available. You can use this for your demo or live account at Nadex. But they got the S&P, they have NASDAQ, they have the Dow small cap. They got the international indices like FTSE, DAX, the Nikkei. You got natural gas, you got crude oil, gold, silver, copper, corn, soybeans, and you got 8 different FX pairs. On the binaries, you got 6, is that right? 8 FX pairs on the spreads, 10 FX pairs on the binaries that you can trade. And so you got plenty of markets, and something's usually moving, or if it's not moving, you can make money with that. Now, you can go in and you can think about being able to do an iron condor. Maybe you've done iron condors before. But, you got to choose the weekly option, or you got to choose the monthly option. What if you could do it every day? What if you do it every couple hours? Well, basically you can. So they have expirations at, on Forex. I mean, they have expirations at 7, 8, 9, 10. I mean, like going around, I guess actually it's on the spreads, 8 p.m. all the way until 3 p.m. the following day, okay, that are going on. And so you can go and you can collect premium or get breakout trades. And, like on the major indices and stuff like that, they got expirations at 10 a.m., 11 a.m., 12 a.m., 1, 2, 3, 4, 4:15. They have ones that start the night before. So there's a lot of contracts there that you can trade, but basically just imagine being able to get an option that expires in the next 30 minutes or hour or 8 hours or 24 hours every single day. That's what trading the spreads is like. If you look at the spread pricing and you equalize the ratio, so let's say on S&P you need 5 spreads to equal 1 S&P E-mini option because there's 50 options in one E-mini option contract, then you're going to see the exact same pricing. So the show tomorrow, maybe I'll bring that up. I'll show the Friday expiration because you need the expiration and strikes to line up to really compare apples to apples. But exact same pricing model. Okay, it's like a call put on a Friday on, like I said, the S&P E-mini CME options. But it was a very cool way to trade. You could hedge. You could go in and you could buy the S&P, but you could buy. Imagine being able to buy a put that only has a few hours on it till expiration. So you don't have to pay for all this premium for end of week, next week, next month, whatever. And you get that massive delta move working in your favor, right? Because it's only expiring in the next couple hours. So if the market does go against you, instead of getting this little bitty protection, then to put up a whole lot of money, getting up a whole lot of profit, which basically makes it absolutely pointless to try to use longer-term options to hedge intraday trading. You can actually get intraday options for your intraday futures and forex trading to hedge your current trades. Very, very cool strategy. One of my favorite strategies. We'll cover that next week in detail. It's called the Ultimate Hedge Strategy. We'll be right back after this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Come on back here to the Diagnostic Trading Hour. Okay, so we talked a little about the spreads, and I'm giving you obviously a really mile-high view, but I'll let you know who the Nadex Exchange is. You can get if you hop on to get a TFN.com, you click on the Nadex banner, hop on over to their website, get a free demo trading account. Demo trading account. Again, you can still trade this with your current platform, or not trade it, but chart the underlying instruments with your current platform. You trade directly on the Nadex platform, or on the scanner, which is 100 times easier. Make up your own username, first name, last name, phone number, email address, click apply for demo. That'll get you set up and hooked up. You're going to need underlying charts. You do need a great charting system. But anyway, so fill that out, hit apply for demo. You'll get an email within probably 30 seconds to a minute with your password. You can log right in. What about if you want to fund an account? How much money do you need to fund an account? $100. Now, obviously, you're probably going to want to put more than $100 in. But all you need to do is fund with $100, okay? And you can fund with 500, 1,000, 5,000, 100,000, whatever suits your account size. But that's the minimum requirement. What about fees? What does it cost, okay? There are no broker fees because you're not going through a broker. You're actually trading directly with the exchange. Every member is an exchange member. And that has its benefits like not having additional commissions on top of exchange fees. So what is the round turn cost on a contract? Well, instead of being like $5, it's $1.80, 90 cents a side. And the best part is it caps out. So if you do 10 contracts, be 90 cents a contract, be $9. If you did 100 contracts in a single order, $9 in fees. So it can save you a lot of money in fees, especially if you're starting to trade some size. If the contract, the option, binary option, or spread option expires out of the money, meaning with no value, then there is no fee on settlement. There's no exercise risk. Okay, so you don't have to worry about something being exercised on you, and you got to come up with something. You can close the trade anytime before expiration on the binaries and the spreads. So maybe you've heard about these overseas bucket shop binaries, not regulated by the CFTC, not in the U.S., not Nadex, where you got to put the trade on, you hold the trade till expiration, and they're rigging all sorts of stuff, or at least not putting things in. They're not completely impartial. Okay, whereas an exchange is impartial. They are there to make fees by connecting buyers and sellers. Okay, they're not making the market. They're not trading against you. So they don't mind allowing you to get in and out before expiration. Okay? And they when they settle like with an average of the last 25 trades, middle 15 on futures. Basically the same thing on Forex. It's the last 25 non-sequential quotes, mid-quotes on Forex, and they average the middle 15. There's actually a standard settlement procedure, not just like the last trade, which could easily be manipulated. So they make sure that it has exchange rules in there. And I'm trying to go through some of the basics for you, that questions that people have. The binaries, not at all the same. They're price ladders. They're not like call put, which is a completely incorrect term because you're not calling anything away from somebody. You're not putting anything to anybody. So they're not calls and puts, but these bucket shops call them calls and puts to make it really simple for the up and down. We make it easy. There's a green and red arrow, and that's all there is to it. And that doesn't make it better. Easy can be good, but it doesn't mean it is good. Okay? It also is limited. On Nadex, you can go over here. And let me clear out all my filters right here. This is the scanner for you. Try to get a live demo right here in the scanner over on TFNN. And looking at this, you can go in and you can find in the money trades, you can find out of the money trades, you can find high profit trades. We're seeing $9 to make $91. Now $9 doesn't sound like a lot, but do 10. Now it's 9 to make 910. Risk 9 to risk, if you wanted to, I guess, risk 900 to make 9,100. That's by end of the week if the market continues to rise. All right. So there's various ways to trade these. You can buy in the money and just collect time on premium. You can do a range bound strategy where if it stays within a range you make money. You can do a breakout strategy. If it breaks out you make money. And no matter what, you have capped risk. No matter how far the market goes against you, you don't have to get out. Now, depending upon your risk on the contract, you might want to exit to limit your loss and equalize your risk reward. But it can go against you by 1,000 pips. You're still going to be down the same amount, but you have until expiration for it to come back. So if it goes, if they 40 pips against you, but normally use a 30 pip stop loss. So it goes 40 against you, but it comes back. You're only down that, risk of say $30 or 30 ticks instead of 40 ticks, and comes on back in your favor. And now you can do that. So there's some really cool ways to do it. I know I'm talking fast, but I'll slow down for you. I just want to sort of get through some of the stuff so you understand what's there, you understand the possibilities, hopefully pique your curiosity a little bit, and I'd be glad to help you. And like I said, over the next week, I'll go through and I'll do some reviews on different spread strategies that you can do with futures and Forex, especially the hedging strategy. It's my first strategy I came up with. It's still my favorite strategy. So when I'm buying or selling oil or gold or the S&P or whatever, I'll hedge it off of the spread to limit my risk. And, I've done the trades live right here on TFNN. I'll go in, I'm being risking like $25, $50 on an S&P E-mini. No, that's a point, right? But I'll have a 10-point stop loss. And why? Because I have an option that's hedging me 10 points up. So, if I'm going to lose 1 point at most, if it goes up 10 points, I'm down 1 point. Okay, I'm down $50 because I made $500 in one account. I lost $500 in one account, made $450 like in the Nadex spread account. And so on my net I'm down $50. So you could have a lot wider stops. You don't have to worry about, somebody hunting your stop orders and knocking you out. And have the ability to, once the trade moves in your favor, you don't need the contract anymore because you're trailing your stops at that point. Or you can add on another one to lock in profit if you get nervous. So there's, like I said, there's still a lot of ways to trade it. But that gives you a very quick mile-high view. Definitely not sufficient, but quick. If you hop in here and you check out the free subscription over on TFNN, you'll notice the first thing you're going to see on the homepage is there's going to be just, step one. Watch the tutorials. Right here. Getting started, step by step, basic application strategy. Who's Nadex? What are the spreads? What are the binaries? Etc. And then archives of my show where I go through and I walk through different strategies and different ways to trade. And step two, while watching tutorials, use the help desk. Ask me questions. Use the box spread and now the binary scanner as well, and use the deviations, whether you're trading futures, forex, Nadex, whatever. And so there's tutorials walking you through each step of the way. So anyways, check it out, and we'll be glad to help you. But the number one thing I want you to make sure you do, whether you're trading any kind of derivative or product, is to make sure you have a solid charting platform, okay, that has underlying futures data, forex data, okay, maybe stocks and ETFs, but, if you're trading like, a derivative, like a Nadex spread, then you want to make sure you are looking at, a solid platform that gives you oil, gold, futures, and there's a lot of good ones out there, and whichever one, works best for you. But I know eSignal is an excellent option, and I'm actually looking at, I used it a long time ago. I'm actually looking at coming back to it. I want to check it out. And one of my favorite things, and this is actually the number one reason I like using eSignal, the number one thing I like about using it is a strategy called seasonal spreads. And on seasonal spreads, you can go in and basically you look at the seasonality of like buying, the front month contract and selling the back month contract on, say, oil or soybeans or, whatever. And on every other platform that I've ever tried them on, you can only get a line chart, meaning they'll basically only show you the end of the day. They don't look intra-bar. And so you can't use all your trading knowledge, like candlesticks, you got candlestick patterns, and a lot of the different patterns as a trader that you come to rely upon in all your other trading strategies, you can't use those when you're doing a future spread of 2 different months, okay? However, on eSignal, since it looks intra-bar, will actually allow you to open a open high low close or a candle bar on a future spread. And that's one of my favorite strategies now that some of the things are coming back into play. Took a little break on those seasonal spreads during the financial meltdown, but now that's starting to come back into play. Want to hop back in on that, and that really is the only platform I know where you can pull off that strategy. Let's go ahead and check out oil. Let's check out natural gas, and we had those 2 reports come out today. So, we had natural gas come out today, oil yesterday. But we had a perfect 1 deviation, again, implied volatility deviation move on oil, dropped on down, and it's pulling right on back, doing exactly what we expect. And again, why is it so accurate? It's using the expected movement based on the options price. And let's check out yesterday. What happened yesterday? So we can go in here, and sometimes we don't get a deviation like from settlement. Sometimes we get a deviation from high to low. And so on that high to low deviation, again, you can use these on any instrument. On a deviation high to low, looking at yesterday, so we already saw today, right over here, moved on down, we hit that deviation, even exceeded a little bit, but it pulled on back, obviously. And then we look at yesterday. Look at that. Perfect move right to the deviation level. What does it do? Pulls up a little bit, tries to spike it one more time, and then turns around. And you could miss it not paying attention to the high to the low, because see how it goes up 0.5 and down negative 0.5 over here, which would be exactly 1. And literally, to the tick, we're right on the money. Right there on that second final spike, it literally just touches it. And let's see, what reading we get? 0.977. Moved up to 1.11 right there at the end, actually. So 1.11. So just barely over a 1 deviation move in that final spike before oil pulls on back. But let's look at the oil inventory report from yesterday. And that's going to be our expected range. We want to check out expected range on the hour. And there we go. Okay, so oil inventory came out. Let's there's a lot of different things that we can look at. And the main thing I want to do is focus on this 1 hour. If I pull up, there's a lot of websites, and I know with different platforms you have feeds coming in for news. When we look at the oil inventory report that came up yesterday, and right there we go, 10:30. We had basically we had a much better report than expected. 1.7 million barrels, an increase in storage over the expected decline to 1.2 million barrels in storage, and so price should go down, right? But doesn't always. So I don't really trade the number. I just trade the expected move. And so I'll do that with Nadex. I'll go in like at the top of the hour, maybe 2 hours. I might change my expected range to 2 hours. But at the top of the hour right here, moves on up. What's my expected move up? About 54 ticks. What's my expected move down from here? We're going down about 54 ticks right there. Same thing. I mean, I'm just got to, not being real detailed on my plot. And what do we actually get on the low to the high? A little bit more. So got a 77 tick low to high on that move right there. So we actually exceeded that expected movement a little bit, but we didn't exceed it straight up or straight down. Okay? So by using these expected ranges, then that gave me a proper expectation to look at for a potential iron condor trade, buying the lower spread, selling the upper spread, or a butterfly, buying the lower binary, selling the upper binary, or if cheap enough, okay, maybe doing a straddle or strangle, where I'm buying the upper spread, selling the lower spread, or buying the upper binary, selling the lower binary. So a lot of combinations you can do in there. You just got to look at what is the pricing at the time, how much movement are they building in. But that report happens at the same time every week. And I've actually noticed that basically the 9 to 10 and 10 to 11 are usually very consistently high. I can go in. I can actually pull a expected movement report right there. Let me pull that up. We'll look at it real quick. And if I can get it to show in the right window. Got always resize in there. Well, I went over it yesterday, I think. But anyways, I'll look at that and I just notice what are the times a day that I expect the most movement. And I can look at expected range. I'm actually about to bring in expected volume as an export feature as well to know when is the volume usually highest. Of course, I want to look at like 60 minutes. I wouldn't want to hold up 4-minute reports. But that'll be a feature I'm going to try to bring in here. And as we get this wrapped up, obviously bring this out to multiple platforms. And so anyway, so that's how you do oil inventory. You just look at what is the expected move. And we talked about what the expected move was at the beginning of the week. And let's look at natural gas. All right. So looking down here on natural gas. There we go. Load that on up. And, okay, here's today. And we go over, let's look at how the report came out today. Thursday, natural gas storage came in a little above expectations, which theoretically should make the market drop. It did. But doesn't always happen that way. As we just saw in oil, it should have made the market drop, and it went up. What was the expectation? Well, the expectation on the move, right there, 0.146. We go down here, and, 0.145. And we hit it pretty much on the money, high to low. So, we're like within maybe like a tick. So I did really, really well on that one. So we get 140 versus 145. So perfect movement, great setup, gave us the exact number we needed to take advantage of spreads, iron condors, straddles, or binary strangles or butterflies. Everything you needed, all the information right there on the chart. All right, stay there. We'll be back right after this.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. the king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better, a 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability, available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we'll come back here to the Diagnostic Trading Hour. This is wrapping up natural gas for you. So it moved on down 1 deviation, but it did so with a lot of volume on that second spike. And so that actually was able to push it on through with the news, pushed on through 1 deviation, moved on down to 1.5, just barely touching it, pulled on back really quick. Okay, and then it worked on back, made a little support resistance level, trying to go back through it, but, and actually more volume than usual for the entire day. And set up lots of great momentum scalps and different types of trades that you can do right there. But anyway, so another good trade day for natural gas. And let's see, what else do we have on the roster? Let me pull that up for you real quick, and we'll talk about what we have going on next week. And here we go. So for tomorrow, we're going to have the final GDP quarter over quarter, not a consistent report, not one I like to trade. It's one I want to be aware of, okay? And again, it's the final GDP, so like the one we had this week. And remember that? Had the big move, sort of, but then went right back because it was already expected and priced in, bad weather, whatever. Like that seems to be the mantra, like every, like report for it's bad. It's a bad winter. It's a bad winter. That's why it's bad. I'm like, okay, there's a lot of people in other states like Texas and California and Florida. It's not all New York. But all right. Anyways, so if we go on up here and, we had bad weather. We had like 2 days where you couldn't drive anywhere because of ice. I don't think that messed up our entire economy. Anyway, so we'll go on over here. So what do we got Sunday? Just doing a quick rundown, not going into any details because there's really nothing here to go into, I don't think. But I just want to make sure. What do we got? New home sales. Nope. So no average thing. So nothing on Sunday. Just be aware that a new home sales report is coming out. It's not going to help you a whole lot. It's coming out sometime Sunday night. It is tentative. It has not been released at time, which doesn't help a whole lot. There's no forecast even put up on the number yet to even help you out. So there's no major news you need to be aware of because you need some expectancies. And let's see, they're actually behind on their expectancies. Usually Forex Factory is a little faster on that. So we'll do a review tomorrow. I'm sure they'll have it updated by then. But just to give you, let's just do a quick walkthrough for the last couple minutes here of the show. What's coming up next week? All right, we're going to have GDP month over month, and it's going to be good. Okay, so yeah, that'll be one that we'll be looking at over on the CAD. We definitely have some nice stats on that one to go into, so that'll give us a report. And so we'll cover that one tomorrow. Okay, we'll get that news plan down for you. We got Chicago PMI. We got pending home sales, so we'll check that one out. Manufacturing PMI in China, not really so much we're going to have stats on it, but it's one of those, we're going to talk about being aware that it can really impact the yen. Also, same with the PMI, even the Aussie. So I've been seeing more and more impact on the currency pairs. Hopping on over to Tuesday, we're going to have a interest rate release by the Aussie dollar. So that could have some fun stuff with it. We'll check that out. We got manufacturing PMI, usually a good news trade report, right there on the pound. And we've got a bank holiday happening in Canada on Tuesday. You're going to be aware of that. Be lighter volume there on the dollar CAD. And let's see here. Just trying to see what really matters out of all this. We'll check out the ISM manufacturing PMI. Probably be a nice neutral trade for us. Probably trade euro dollar on that one, 10 a.m. on Tuesday. And then we'll have Aussie dollar trade balance. So that's not too bad. Wrapping up Wednesday. We're going to have ADP, NFP. Oh, NFP week coming up. Fed share is going to be talking. And, interest rates on Europe's coming out with the press conference as well. And like I said, don't have the NFP on here. We'll see if they update that. Oh, because it's Friday. So we're going to have ADP NFP without NFP. And then we got a holiday.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.